Hi everyone, thank you for joining us again on DigiTutorials. So let's talk about finance. I know this is going to be an interesting topic for a lot of people. So being that it's January 2025, we are really right where we need to be. So a few highlights. We want to talk about finance because a lot of things happened before COVID and during COVID, and a lot of people had issues with regards to their properties, their savings, investments, and all that stuff. So we want to remind you that it's not too late to understand what's going on and also to have a plan in mind. So that's what we're going to be talking about today. So this is a highlight of what we're going to be discussing. So what is financial planning? Why are we talking about it? It's planning for the future. And why we're talking about it? Because it is important to know where you go from here in order to understand what your needs are, what your goals are, and where you want to be in 5, 10, 15, 20 years from now. We just want to advise that this financial presentation is not a one solution fits all. It's only kind of giving an overview of what a person financial needs might look like. And we just want you to be aware that each person financial situation is different. Therefore, if you need financial advice, you need to speak to your financial advisor at your bank, at your investment location, or wherever you get that kind of advice, usually from a financial planner. And you have professionals who are in that field who can help you. One of the things we like to say is when we honor the Lord with our wealth, we will inherit the first fruits of all our crop. And when you honor the Lord, you will have a lot overflowing. As it says here, honor the Lord with your wealth, with the first fruits of all your crops, then your barns will be filled to overflowing, and your vats or vessels will brim over with new wine. So it's biblical to honor the Lord, and it may not necessarily be in terms of money. It could be in services, doing good for others, and so on. When we sow our seeds out there, you reap it later on in life. And again, being a good steward, whenever God gives us wealth, we have the ability to enjoy them, and we accept the lot and be happy in our toil because it's a gift. So it's okay to enjoy the fruit of our labor. So before COVID, a lot of people had plans. I can say on my end, my family, we had a lot of plans. Even particularly COVID-19 that year when it broke out, which is around the end of December of 2019, I was at Europe. I was in Europe. I went to Paris. I went to England. I went to about 8 European countries, and it was a blast. Everybody was shopping. Everybody was doing renovations. I did my basement. I had investment plans, save, and so on. But COVID happened. So we're still have not fully recovered from this yet. And this has affected the country tremendously. So before COVID-19, and this is just to give you a highlight, the gross domestic product, which is the monetary value of all finished goods and services made within a country, it was declining at one point. So even though COVID happened, it was not because of COVID why it was declining. This was also happening prior to COVID. So a lot of things that happened during the pandemic, and like I said, a lot of businesses suffered, and people have not fully recovered yet. A lot of businesses didn't even open again. If you go and walk around, certain mall strips, you'll see new businesses opened up recently because the ones that were previously there had to shut down. And unemployment rate increased, and right now it's coming back up, but it has not really gone to the full extent as it was before. A lot of people went into debt. People weren't able to pay their bills, and the government had to step in to help in a lot of ways. So the 10 fastest industries that were booming during COVID, as you can see on the list, e-commerce, particularly supermarket and grocery store, which I'm highlighting those three, pharmacies and drugstores, because a lot of people were sick. So the drugstores were instrumental in helping people getting medication, and even some items were not even on the shelf because there was a high demand of pharmaceutical products. And supermarkets, even though some items were scarce, the demand was still high because people were eating at home, people were cooking at home, people were using their resources at home. They weren't using it at their location of work. So people still needed to buy their groceries and so on. And e-commerce, which is online transactions, that was booming because a lot of people are buying products online. So this is how the financial system was affected. And like I said, we haven't fully recovered. The public sector, which is, well, let me start with what's happening at the top. Because of the loss of income, a lot of people were uncertain of what was going on. Then household, they were having, even some people went into foreclosure. And the banks were affected because now they were providing credits to people who weren't even able to pay their bills. And also there was a high credit risk because financial market was impaired at that point in time. The public sector stepped in, which is a government, and they tried to help the household persons, individuals, businesses, and so on. And as I mentioned in the tax presentation, they brought in CERB, and CERB was helping with giving individuals help as well as businesses, so businesses didn't have to pay out EI. And the assets that people had, they had to sell them in order to get funds to buy their, facilitate their needs or their basic needs. And so even like the pension funds and investment funds and so on, people were liquidating those. So the bank was also feeling the pressure because now they couldn't hold on to some of those assets. So what's the current financial climate? So I know this slide says to 2023, and this is just a past that we were looking at the time. So a lot of things were shifting. People were not thinking about planning for the future anymore. People were just thinking about current needs. And at the time, the middle class, the low income earners were within 57%. So most of the people within the society were actually in this bracket. So we also had an issue with the Bank of Canada, and we had inflation that was just going all over the place. And we know, because now it's 2025, we can look back and we saw a lot of issues in 2023, 2024. That's when a lot of people had to really sell their properties and get out of mortgages. People had to go rent. And the government was stressed out with giving help to businesses and individuals. So there was a lot of help coming from the government, and then the government also was going into debt because they had to fund all these different areas, which is the consumers, residents, and businesses. And this is just an idea of how the government, they distribute funds based on what they get from residents and so on. So if you notice that 55.2%, most of the revenue that comes into the government is from residents, from personal income tax. And then we have corporate income tax, which is just, you would say, almost a quarter, not even a quarter, maybe 1/6, right? Which is 17%. And then non-resident income tax, those persons who are not living in Canada at this point in time, it's 2%, 2.6. GST, which if you watch the previous slide in the tax, you'll see that GST is one of the ways that the government receive income. So when goods are being purchased by consumers, we pay the tax, and then that becomes part of the pool for which the government gets the revenue. So this is other tax and duties that would have been like tariffs and customs duties and so on. EI premium, this is where the government well, they actually rely on the employers to withhold the EIs that comes from the employee's income. So it's deducted from the employee's income, as well as the employer has to match that and supply that to the government. So the government is getting both shares from both the employer and the employee. And this proceed, it's from pollution pricing framework, which is something that the government had imposed. And also we have other revenues that are non-identifiable here. So this is what happened in 2020 to 2021, which was just after COVID or during the COVID period. And which means that the government was holding $316.4 billion. So interest rate continued to rise back in 2023, 2024. We had a lot of stressed people dealing with this issue here. And like I said, we have not fully recovered. We don't know what 2025 is going to hold, but we're just reviewing what happened in the past. So where do we go from here? Let's think about it. We need to think about financial planning, because if we don't think about it, we're going to end up right where we started. And if something dramatically happens in 2025, we will not be prepared for it. So what's included in financial planning? 4 simple rules that we're going to talk about. And we're also going to talk about the common mistakes, and we're going to do a little bit of the benefits and education of financial planning. And we also have to think about retirement, because though you're young, if you're young, you can't just think about the here and now. You have to think about the future, because even for young adults at this point in time, it's very difficult for them to even own a home, because the income that is generating enough revenue for them to save is not sufficient. So it's the savings are going to be very scarce if young adults are not planning properly. So, and I know a lot of young adults, including myself when I was younger, like to spend money. So spending money, this is not the time to spend, this is time to save. So 5 steps of aspects of financial planning. One of the key things is to assess the financial situation. What is the current financial situation? Where are you now? Do you owe a lot of money? Evaluate different investment options. There are so many different investment options. Right now, there's a lot of places where you can do passive income, and hopefully we can cover that as time goes by. Write down your financial goals. You can't know where you're going unless you know what you want to do in the future. And then create and implement a customized plan for yourself. And like I said, you know, even though we're having this conversation about financial planning, you can't rely on all this information here only. You have to speak to a financial planner, like a professional financial planner, who can help you with the information. Reevaluate and revise your plan. Don't just have a plan and think that that's it, it's in concrete writing. Make sure you revise it, and if it doesn't make sense, keep revising it and work with it as you go along. So what does financial planning mean to you? Perhaps you probably think financial planning means just budgeting, or financial planning means just planning for the future. It's all of it. It's budgeting now. It's planning for the future. It's planning for even emergencies that may come up. Sometimes emergencies come up, such as a tire is blown. You don't have that money because you didn't have any money saved up to purchase that tire. Anything can happen at any time. So financial planning could be anywhere between 1 year, 3 years, 5 years, and so on. Any time in the future is part of financial planning. What steps is it like worthy to be taken? What steps can you take to make sure that your financial planning is sustainable? That's what you need to think about. And this is an individual question. We can't really answer all these questions because we know that in terms of financial planning, it's an individual thing. But one thing we know is that every financial plan should consist of short-term and longer-term goals, as I said before. We have to live from day to day, but we also have to think about the future. Sometimes people are confused with wants and needs. They confuse what they think they need. For example, traveling and things that are not necessarily the most ideal. That's going to give you the most gratifying thing in the near future. And sometimes people spend a lot of money on these things. Yes, it's good to take a vacation, but consider a more economical way of flying, and now that, with airline prices and all that has gone up, baggage fees has gone up, all these different things have gone up. So you have to consider what means of transportation is best for you, where you can go now in order to meet your goals. And if you have money left over after you have achieved maybe for the year what your goals are, then you can consider doing these things. Because if you spend everything you have now, you won't be able to achieve the goals that you have set up for you. So you have to consider that. And as I said, 10, 5, 25 years, that's something we need to think about. We can't just think about the here and now. Make plans towards the future. Generational wealth may not come. Some people inherit, but they don't always do that. And another thing, for those who are older, should consider leaving behind something for their younger ones, because right now it seems like this is the only way that people are going to be able to survive. It's best to start thinking about not just yourself, but your offspring. And I know in Canada, it's not the norm that people are thinking about their family members. It seems like everybody's thinking about themselves. It seems like it's an individualistic society, but in the eastern side of the world, people tend to be more concerned about the family and then themselves as well. But it seems like it's more of a norm to be able to, well, it's a more of a norm thinking about yourself first. And, the Me Too movement and all that, it's always about me, and the I. A lot of people are just thinking about themselves. So this is something that for those who are older and have children should probably start thinking, not just about your own self in terms of, what you want to achieve. And then when your children get older, then, you're considering, well, I don't have to have anything to do with them anymore. But it is definitely important to really start thinking about your children's future as well. Being that I have older children, I think it's a thing that I've always had in the back of my mind, but I don't necessarily want to make them think that they're going to sit down and just wait for that to happen. But at the same time, I would love to see what I can do to help. So that's something that people should consider. So sometimes people do investments and they do not consider their risk tolerance. They get into investments without even proper financial advice. And it is important to do that. As I said, get a financial planner or someone who can provide proper advice, because getting into investment nowadays and losing, it's a tremendous loss, because you don't know when you're going to be able to recover. It's not necessarily guaranteed that you will recover, especially given the changes in the economy. And within the financial world, it's very difficult right now. And a lot of people have lost a lot, and now they are basically regretting a lot that they have done in the past. I, for one, have done a lot of investments, and not everything worked. So make sure you get a lot of financial advice and go through a lot of financial planning. And also for those persons who are able to give you like an insight of what might happen in the next few years, they are in a good position to share that information with you. So even though this list is here, like common stock, hedge funds, some of them are risky and some of them are more moderate. So think about that. Are you risk adverse, or you're more a conservative investor? So manage risk for the best possible outcome is what I would say. And real estate might be one of the most consistent and profitable, but sometimes you can lose the property as well. So consider that. One of the things that a lot of people try not to do is pay their debts. They tend to escalate debt. And like I said, be aware of your needs and your wants, because if you don't, then you're going to end up with exorbitant amount of debt, and then you're going to get stuck. And in Canada, we rely on credit history, like a very positive or a very good, excellent credit history in order to move ahead. So if you rely on that, maybe that's something that you want to make sure that you pay your debts. Don't allow your credit cards to be, I think they said over 40%. And if you, even purchase stuff, just pay it off as much as you can. Give every dollar a task. That's one of the things that I have always heard. Give every dollar a task. Don't waste money. Don't think that the dollar doesn't count. Sometimes people will throw away, basically. It's almost like flushing it down the toilet. Every dollar counts. Have that as a mantra. Every dollar counts, and give every dollar a task, a role, a responsibility. And when you think like that, then you won't waste money. And make sure you age your money. Try and make your money work for you in the future. Some people tend to not have emergency fund, as I mentioned earlier. And with that said, not having an emergency fund is not good. And the reason why it's not good, because a lot of times we end up relying on our credit cards, and the credit cards is not money we have, it's money we're borrowing. And sometimes we think, oh yes, I have money, but it's not. We don't have money when we are using credit cards. So we need to save, stop using credit cards, pay them down and save. It's best to keep the lower interest debts and get rid of the high interest debts first. Because if you keep the high interest debts, you're paying more money on those, especially cards. It's important, if you're employed, to make sure that you are participating in whatever contribution that your employer is providing. Try and ensure that you match that. So especially pensions. And so, in Canada, we have the RRSP, which is Registered Retirement Savings Plan, or RPP, which is Retirement Pension Plan. So either one, you can get in that and ensure that if the company is matching it, then you are able to get extra funds, utilize what your company is offering. And we want to make sure that we don't miss out on investment due to fear, because life has a way of creeping on us and causing us to think that we have everything working out well. But really, it doesn't mean that just because things look like it's going well, that means it's well. So it is important to ensure that we are planning for the future well, and ensuring that we have enough money to do what we need to do. And this clause here, lifestyle creep, it's basically just dealing with people spending more money than they have. And really, sometimes when people get an increase in their income, they think it's more money to spend. No, it's time to save. Even though you get an increase, it's time to save. Use that money to save or save on in your savings, your retirement, or down payment on a home. So those are ways to get into savings. So that will help with your future goals. So start today. It's never too late to start to improve your skills. One of the things that people are not aware of, there's so many things that are available, even free education. There are some trainings that are available online. Recently, I saw this feed or this recommendation for students to sign up for skills like programs that are available, and particularly in the summer. And some people just bypass that. They don't even think it's necessary, and they don't even try to utilize the opportunities. So it is important to do that so that you can maximize the opportunities for you to earn, because you don't want to put all your eggs in one basket. And one of the key thing is higher education. So while you can improve your skills, make sure that you achieve as much as you can, because just like what happened in COVID, some people thought that when they had their skills, then that would work for them all the time. But during COVID, some people were not able to go out in the field to work, which means only those who had certain knowledge that they were able to utilize, maybe computer, maybe virtually, those persons were able to continue working. So it's not advisable to put all your eggs in one basket, because then when one egg breaks, then you have nothing left. And if that's all you have. So always find ways to increase, maximize, and increase your opportunities. Don't rely on one source. And as you can see on this chart here, it says safeguard your financial independence, prepare for unforeseen medical expenses, and also maintain a good standard of living. Sorry about that pipe in the background. Okay, get tax benefits and better returns on your savings. Support your family dependents and enjoy your retirement and a peace of mind. So those are some of the reasons why it's good for starting today. So we know that financial planning provides sense of freedom. It provides opportunities to achieve your personal goals. It gives you an opportunity to maintain your budget, plan your tax expenses, and even planning tax expenses is so critical. And that's why we don't want to just talk about finance without tax. They go hand in hand, because when there are two different types of taxes that you can pay. And let me explain that. So there's tax evasion and tax avoidance. So a tax evasion is absolutely illegal, but tax avoidance is allowed. So I just want to make sure I'm saying the right thing. So you minimize the taxes you pay by tax avoidance, but tax evasion is when you refuse to pay your taxes, which is illegal. So you can find ways, your financial planner will explain that to you, and you can keep the money in your pocket, save that money, and use it to utilize future goals, like put it towards your plans for the future and so on. And as we talk about this already, retirement is very important. Always consider that retirement, it creeps upon you. You might be thinking, oh, you have a lot of time, but if you start now, as you're young, then you will have a long way to go, and you can save up the amount that you want. Remember that retirement is critical, and if you don't plan well, then you fail to plan. A person who fails to plan they plan to fail. So if I don't plan well now, then I plan to fail in the future. So in conclusion, more control over financial health is important. It's important to also ensure that your decision-making is appropriate. If you don't have a good decision-making process right now, ensure that you improve on that. Make sure you have money available for the future. Don't think that you have enough money now and you can spend all you want. A lot of youth, they think that when they have their little side jobs, they just spend everything. And especially if they're living under their parents' roof, always remember that if anything happens to your parents, then you're outside. And secondly, you can utilize the time while you're under your parents' roof to save your money. So always think of planning for the future and set money aside. All this, it reduces your stress levels when you plan better for the future. A lot of people, even though it's not recorded very frequently in paper or the papers or on social media, but a lot of people commit suicide based on issues with finance. A lot of marriages break up because of issues with finance. A lot of people go through depression because of issues with finance. So finance is a very big topic that needs to be addressed. And we can also talk about budgeting next time. We can talk about all these different things, but this is just an overview of why it's important and why we're talking about it. You can provide generational wealth for your loved ones coming up after you. So don't just think it's all about you. And you can support others and various causes. Like you can even utilize some of the extra that you have, help family members, help someone who you might see in need, and just be sure that others, who might need help might just be on your doorstep, and make sure that you don't just consider the here and now. So that's it for today. And I hope that you have garnered sufficient information from this presentation. And I hope that if you have any questions, you can let me know, and I will provide as much as I can the answers in the chat. And if anything that is outside of my scope, I will be forwarding you to a financial planner. Okay, have a wonderful day.